Hello. This week oil prices have risen whilst electricity and gas curve contracts have closed the week lower. So let's have a look at the week's actions in a bit more detail. Oil prices softened throughout Monday's session as global production appears to be rising. However, late afternoon prices rallied and closed just above Friday's close by 26 cents per barrel. Tuesday's session mirrored Monday's, with prices softening during the day before seeing a late rally in the afternoon. Tuesday's gains came as government data suggests that US production is likely to fall in 2018. Brent prices firmed on Wednesday following the release of the weekly EIA report, and the report showed US commercial inventories decreased by 7.6 million barrels. Another day of gains on Thursday, with front-month Brent closing at $48.23 per barrel. Gains were restricted by reports that OPEC members' compliance with the production cut deal is diminishing. Last night, Brent closed at $1.5 per barrel higher than last Friday. With higher Norwegian imports, the system remained healthy throughout the day, and as a result, prompt prices eased. Initial softness in oil prices pressured curve contracts lower, and as the rally in oil price came after the close of the MVP market, gas contracts didn't have time to react. Prompt prices were pushed lower on Tuesday thanks to a healthy supply outlook. LNG send-outs increased and flows through the Seagull pipeline increased following the return of a Norwegian platform. Curve contracts took their direction from the prompt. Losses were not as great though. It was another bearish day on Wednesday. A reduction in gas demand, thanks to an increase in wind generation in the power sector, left the system comfortable. Prompt prices fell, as did near-term and curve contracts. A stronger pound relative to the euro also added to the downward pressure on curve contracts. The curve strengthened on Thursday, taking direction from bullish oil and ignoring a strong pound. Rises on Thursday meant that most contracts closed last night flat compared to last Friday. Prompt prices were directed higher on Monday as supply margins tightened. Both wind and solar generation reduced, and CCGT availability is also reduced, which has put further upward pressure on prompt prices. Most curve contracts softened in line with their gas counterparts. Day-ahead prices significantly reduced on Tuesday thanks to a reduction in forecasted demand. Wind generation was also expected to rise and reach 2 gigawatt and solar the same, which bolstered the supply of renewable energy. The rest of the curve tracked gas prices lower, although the losses were marginal in comparison to the prompt. Prices softened once again on Wednesday before posting gains on Thursday. Prices tracked the movements of gas very closely, and last night most curve contracts lost between 0.2 and 0.6 pounds per megawatt hour. You can download the full version of this report from our website. Thank you for watching, and we'll see you next week.